I hope you're having a profitable day, my dear traders. Today, I'm sharing a trading strategy on the Quotex platform that gets me $2,000 of net in just 10 minutes thanks to a combination of two moving average indicators. Want to learn how to do it? Then stay tuned and let's start. Hello everyone! You guys are gonna probably be surprised to find out there's one simple strategy that gets you over $2,000 of profit in only 10 minutes. Today I'm gonna try and prove my own words in practice by trading with one very famous and simple indicator. But there's a number of nuances one should account for, as the success of your trading session directly depends on these things. So if you're interested in building and increasing your capital, make sure to watch this video carefully. Let's start. Today we're trading on a third-party platform by requests of some of my followers. Don't forget that you can find the best trading conditions by the link in the description below this video. So first and foremost, we're gonna want to add the indicator. Our today's loyal companion is the moving average indicator. We're applying the first moving average line. The period here is 11. The indicator's type is EMA. We're also making the line a bit bolder and changing its color to green, for instance. Now we're adding the second one. The same indicator, the period is 56. This time though, the type is EMA just as well. Let's leave the color red, and this one must be even bolder. Now we're witnessing two moving average lines in the chart we are gonna be working with today. Let's go ahead and start trading. So our goal for today is earning over $2,000 on net profit in one trading session. So assuming we'll make five $400 deals and all of them close in profit, we'll end up with approximately the same 2,000. We're gonna be adjusting the deal amount as we go anyway. So let's get back to the deal itself. As I've already said, there are a bunch of nuances besides the strategy itself. We will be naming them throughout the video as we go just as well. So we've got two lines. The first line is the fast green one and the second line is the slow red one. Intersections of the two lines are essentially our signals, but there's a catch. Today I'm gonna try using signals to buy only, as my experience has shown, and the general statistics as well, long-term deals made with signals to buy work out a tiny bit better than signals to sell. This tiny bit is exactly what gets us the primary result. Thereby we can see an intersection of the two lines. By the way, you should also remember the green line has to cross the red one upwards, and we're entering the market. If we are already late, for instance, I've just opened this currency pair, but the price has already gone too high. In this case, there is no way for us to take the risk. Otherwise, we might lose money due to some, corrective retracements or whatever. So keep that in mind. Always look through all charts, search for a potential signal and bookmark the assets in order to have a quick access to those charts where an intersection is likely to be expected. Here, for instance, I say right now, or one candle ago did that intersection occur. The market has yet to increase too far, so we are placing a trade. Now we're facing the first nuance. Draw your attention to this real quick. The time frame of one candle is way shorter than my deal's expiration time at the moment. I trade with 1 minute deals. Those are truly short ones, but I work with this way primarily because I'm recording a video. I wouldn't want to extend it for a while. You know what I mean? I gotta give you guys a wealth of information in just as little time spent as possible. Thereby my deal's expiry is 4 times longer than my candle time frame. If you're intending to use this strategy by yourself, I would obviously recommend you to use 1 minute time frame for your candles at the very least. Basically, at the moment, one candle takes only 15 seconds to settle. You can notice this timer right here. This means there are 14 seconds left until the candle settles. If we switch the time frame to 10 minutes, for example, one candle of such kind, no matter whether it's red or green, it will take 10 minutes to form. I'm sure everything's clear enough so far. Now let's talk about the deal's expiry. Why is it 4 times bigger? Actually, the number isn't that specific. I just thought this would be the most appropriate trade duration relative to the candle time frame. You know, the trade duration to time frame ratio. Since the indicator isn't immediate, the market might both either rise or fall after this intersection. On a global level, however, globally, there would be a prevalent uptrend on the market. So in order to lower your risks and decrease your chance to stumble upon this kind of correction, just like the one that's happening right now in the chart, in order to lower your risks and chances to lose because of this retracement, we place a longer trade. 4 candles. 4 of them. This gives us, more assurance the market will actually end up higher than the level we initially placed our trades at. I hope everything's clear so far. Let's carry on. So guys, the next nuance, to be honest, I don't remember the number of it exactly, but if you see this type of a situation in the chart, and what I mean by that is an enormous number of intersections, go ahead and skip the case. It's not worth it. We should never ever trade within this kind of chart. The price is basically trapped in a tight and narrow range. There are obvious top and bottom borders. This is essentially a sideways motion. Of course, any kind of trading in this case is out of the question because our trades imply catching a trend shift, right? So now let me explain what this means once again. The chart was, for example, moving within a downtrend for a while, then it morphed into a very tiny flat motion, and then came the turn of an uptrend. Meanwhile, our two moving average lines are located this way, something like that. And this is our slow line, and this is the fast one. This way, the two lines intersection only confirms the market trend has actually changed. When the market moves within such a narrow sideways motion, there is no trend to be found. Therefore, we can witness a bunch of false signals right here, which is, why one can lose money with them. Keep that in mind, guys. It's very important. Honestly, I've been picking a suitable currency pair for the next segment for ages now. So many cases of a downward chart, because as many cases with a narrow sideways flat motion, I'm sure the vast majority of you guys would have not spared the patience already, placing a few trades at this point, which would close with at least a very uncertain outcome. Now I think I have finally found the chart we can place a deal upwards within. Really hoping the lines will finally cross now. However, for some reason, the candles just don't want to settle normally so far. Even now, there's no intersection yet. I'm waiting for an adequate green candle so that we can see a completely settled intersection. For example, now, let's wait. And we're still waiting for it. Yep. Amazing, we're placing a trade. $500, 1 minute. The chart looks pretty normal, I'd say. The structure is like so wavish. There was a downtrend. Here's a great signal to buy. The price has retraced a little bit and now is probably ready to move up. I guess no further comment is necessary. Everything's according to our rules. 30 seconds are left. Let's just observe for a little while and relax. Well, not the most confident deal out there. The correction could have ruined it all for us. However, the market kept rising anyway. And exactly in order to not lose because of these corrective retracements, exactly because of that, we use different time frames for candles and your expiry. On a normal day, with a normal strategy, I would feel free to use 1 minute for both of the settings. However, this strategy implies such nuances. One should make sure to keep that in mind if you're here to make money, obviously, and not lose it, So we're getting ready for the next deal. Strictly following the rules, we are waiting for an intersection. The green line must appear above the red one. Yep, great, the intersection is settled. The candle has formed, so we are placing a trade upward. The case is pretty well balanced. I truly enjoy it. We can see a wavy structure in the chart, which is exactly what's normally recommended for trading. Here is a rise in motion, which was followed by a fall in one. The indicator confirmed this downward motion, and now we're waiting within a mirrored situation. I mean, we're trading with such a situation upwards. As I've already said, I wouldn't enter here since, one of the rules of this strategy is only ever traded upwards. You can obviously feel free to test out different options, but as I've already stated, upwards trades work out successfully more often than downward ones with this particular strategy. I mean, I'm not talking about the other ones. So, I cannot but use this factor. Moreover, the fourth deal in a row has just closed in profit. Amazing, literally amazing. We only have to make $260 more to surpass the number of 4,000 in our deposit, and to therefore reach the 2,000 of net profit we were aiming for. So I think this trade is quite obvious too. Honestly, I really liked today's strategy. I will try to apply it on tomorrow's free trading session on my Telegram channel. So if you want to trade with me and try out Signal earnings, welcome. The access is public and free. I think we can sum things up at this point. 20 seconds are left until the deal is closed. I'm almost 100% certain it's gonna get us a profit. Our primary conclusions. First, only trading upwards. We're not placing a trade if the price has already moved too far after a signal occurred. The third rule, we make sure to be using the deal's expiry much longer than the time frame of a candle. And 4, we're not trading during a flat or sideways motion. 5, we're waiting for the intersection to get confirmed. Follow this advice and you're gonna be alright, guys. Thank you guys for watching. See you in my next video. Bye bye.